and Lyft. Joe currently uses multiple phones to efficiently drive for Uber and Lyft. But this can be a pain at times and very unsafe. That was until Joe found Maximo, the rideshare app that automates Uber and Lyft ride requests. Maximo will use the filters set by Joe, like time, distance, and passenger rating, to determine which rides are best suited for Joe. When a ride request comes in, Joe doesn't need to worry. Maximo will automatically accept the ride request that matches his filters, and then turn off the app that isn't currently on a ride. Once Joe finishes the ride, Maximo will turn everything back on. This will allow Joe to focus more on his passengers and driving safe.
Hello, everybody, and welcome to a day edition of the Rodeo Live. I'm happy to have back Matt Spoke, the CEO and founder of Moves Financial. I think the last time we spoke was in November. And yeah, I'm excited to talk with you again, because even then I've been telling people since then, you got to check this company out. So I'm glad we're doing another piece that will show up in the feed that people will see, because and I'm interested to hear what's going on with Moves too, because I was looking through some stuff. But thank you, Matt, for coming on today.
Yeah, it's fun to be back. I think every 6 months is a good cadence to say, hey, what's new, what's updated, what else are we working on? So
yeah, for sure. Yeah, I mean, and I was, we'll get to it, but I was surprised you've added some platforms.
Yeah.
That we'll get to. I was kind of, and I was really impressed and a little thrown off by the one you picked. I guess I'll give a little spoiler. I see a couple people in the chat already, but I'll give a little spoiler, is that the first one out of all, even with the big boys, you put WAG first. And I appreciated that, because I like the smaller guys. I root for the small guys,
Yeah, no, I think we don't want to be seen as preferential to any of the big guys. So
absolutely. So yeah, it looks like we got like a few watchers and people will roll in. But what's up, Rideshare Lisa? What's up, Freestyle? How are you guys today? So Matt, can we like just kind of go back in time and start real quick from the beginning on what Moves Financial is, real quickly? Yeah. Don't get into too many details, because it's probably a question of mine I got coming.
Yeah, no, I won't. And even on the name, I'll correct you a little bit. I know the website is Moves Financial, but we just go by Moves. One, to highlight that there's obviously sort of a financial component to what we're doing, but there's some stuff that we're doing that has nothing to do with finances. So, but anyways, Moves.
But it is still movesfinancial.com.
It is movesfinancial.com. Okay, primarily because I can't seem to buy the moves.com domain.
Yeah, I was going to say that's probably a tough one. I don't know who owns it, but
yeah, Moves has been around for just about 2 years. We started at the beginning of 2020, right before the pandemic. I'd say sort of really high level, twofold. One, want to build a suite of financial services and banking products for gig workers, and two, we want to give gig workers access to ownership in the gig economy through stock ownership. So we're and we can get into like what that is and why we're doing that, but that's sort of the two-sided strategy that we're going after.
Okay, so let me see where. Okay, so the only all-in-one financial app helping gig workers manage their business. I think that the last time we spoke about this, what did I compare it to? That I was calling it the new version of the dated. Now I can't even remember the name. Now it's so dated I can't even remember. There was another card out there that it wasn't at all what you guys do, but it kind of was.
Yeah, I won't remember the name either, but I remember that conversation.
Yeah. But there you got the quote of gig work is unpredictable. Your money doesn't have to be. No monthly fees, no minimum balance, and banking features built for your work flexibility. Can you expand on that a little bit, or?
Yeah, of course. Yeah. So the sort of core part of the product is a bank account. I mean, we recognize that a lot of gig workers are working on more than one app. Often with those apps comes the option to sort of take whatever debit card they might have available. So particularly the big ones, DoorDash and Uber and Lyft and a few others. But there's just like a very simple starting point of wanting to solve for a much more streamlined way to manage your money. So you don't have money going to multiple different bank accounts. you're not using one account for a perk that you don't get on another account. You're sort of always spreading yourself across like 3-4 different cards. And so the ultimate outcome that we're hoping to get to is that Moves becomes a card that provides you all the perks and benefits and rewards that you want, or that you would expect from a card in the gig economy, so that you don't have to sort of jump back and forth between 2 or 3, including how you access your money, how you get paid out. So, most of our users are on more than one app in a given week. They're working on 2, 3, 4 apps in a given week. And they have those deposits all coming to their Moves account. From there, we're rolling out features like, not only simple ones like getting access to your pay 2 days early, but also the ability to pay out your instant pay if you're using a product that gives you like a daily payout option. We just rolled out a 5% cash back on gas perks so that you can buy gas in any gas station in the country and get some cash back. And we're rolling out all this stuff on the stock side around how you can earn stock in Uber, earn stock in Lyft, and these companies, so that you can feel a little bit of a deeper sense of like economic alignment. But and then from there, the product will continue to evolve. Actually, one thing I sort of failed to mention is we also have a cash advance product built in. So, and we talked about this last time, but if you are an account holder, then the amount you earn sort of makes up a pre-approved amount, so that you have access to cash if you have some sort of emergency, or you just have a shortage one week, or your car breaks down and you need to make up for some lost income. So we have cash advances ranging from $100 to $1,000 that are tied to your account. So you can automatically fund it to your card and spend it. And then we'll give you some easy ways to pay it back over the course of the next 10 weeks. So,
Yeah, I did a survey on my YouTube channel just recently because it was a question I was dealing with ParaWorks, because I've tried to sidestep from para tip transparency into the works development, because I think that's where the future is. I don't think it's in the transparency portion. I think it's in working with these grocery stores and doing merchandising and things like that. But I did a survey of would you be interested, and I didn't say para or anybody else, I just put out the question, would you be interested, if gig workers, would you be interested in getting your pay? And I think I misworded it because I put per job, but I meant per day. Would you be interested in getting your job per day through a third party, as opposed to through these gig platforms, where then the third party can do whatever they want to figure it out, pay it off every week or whatever in batches, because of the slow payout, the payment problems, if you're deactivated, trying to get your money, all these kind of things. And we got about 100 votes, and 87 said yes, they would.
Yeah, wow.
Strong yeses. So is that this was just a thing of mine. This isn't a para idea or anything that could be stolen or lifted or trademarked. But no, is that something that you guys have even looked at?
We haven't done that same survey, but it doesn't surprise me, because I think what we're hearing a lot is that people are not huge fans of these accounts that they're sort of like, I don't want to say forced to use, but they're like highly encouraged to use. But they use them because there is some like embedded perk that they get that they can't get anywhere else. And so you're an Uber driver using the Uber debit card, you're using it because you want to get access to that one advantage that it provides to you. But you'd prefer not having your bank intertwined to your work app, because there's still a little bit of a tension that exists, let's say, between these marketplaces and the workers that service them. And I've always thought of this as like, even in the more traditional like employee world, where people have jobs as a W-2 as opposed to a 1099, it'd be sort of weird to be your bank account would be your employer, and I think the incentives are a little misaligned. Like if they deactivate you, or if you're, so one, we want to be a standalone brand. We think that if you want to move around as a gig worker, you want to jump between multiple apps, like you should never lose access to financial products or services because you decide to go from Uber to Lyft, for example, or you decide to, or you get deactivated and all of a sudden your pay is frozen. So, the fact that we can consistently serve you regardless of which app you're working on, and try to provide you as many of those same benefits as possible. And ultimately, we're going to provide you those same benefits and more. Some of this takes time to build. Like we're still a pretty early stage business. I mean, we only rolled out our banking product in September of last year. So right before we last spoke. So, we've had a banking product in market for maybe 7-8 months. Like it's an early stage thing that still needs to get built out. But the basics we have really, really well in market, and people are getting a lot of value out of it. So I am not surprised by that feedback. I think people would prefer to not bank with Uber or with Lyft.
And that's why I got to say, I don't think that, I just do a lot of brainstorming with 2 other people on ParaWorks where we literally throw everything at the wall and see what sticks. And honestly, we all thought it was a good idea. I don't think it's the perfect idea for Para, but it was like the next day I was like, wait a minute. And I knew I had this meeting coming up, or this interview coming up with you. And I was like, Matt might be the right guy because he is actually already in with a bank.
Yeah.
I mean, it just seems like everybody would want this. Nobody really trusts these, people are already not liking the gig apps as it is, but they also don't trust them. They don't trust them to pay things out. Like here in Colorado, if like you work a W-2 job and you get fired, it's law that they have to pay you everything they owe you that day.
Yeah. Yeah, I know a lot of those.
Not every state is like that.
Don't carry over to the 1099 gig worker, right? So,
right. And but I mean, with that kind of thing, you could have a week's 6 days worth of pay. And I've heard of people not ever seeing that money.
Yeah.
So oddly, before I move any forward to Kyle Dash has joined us in the chat. And he has a good question because we talked about this during tax season. Have you thought about easier mortgage lending? I think what he's getting to here is that when Mrs. Rodeo did the tax seminar, because she's an accountant and CPA, so
yeah,
So
am I, by the way. I don't know that we touched on that.
Oh, you are? Okay.
My prior life.
Well, then you'll appreciate this question.
Yeah.
She had brought up that it's very difficult for gig workers to get mortgages. That it's not something that the banks like to see and whatnot. Is Moves able to provide help in that respect? Are you following what I'm
totally
saying here?
I think I get Kyle's question. I mean, I think there's 2 layers to this. So one, our direct ability to get into the mortgage business, I think if we ever get there, is a long way off. But our ability to support gig workers to be more desirable as customers for mortgage lenders, a lot of it comes down to how easily can you prove your income? Do you have a sort of pretty, Kyle's word, a pretty statement that sort of shows how much money you make? That's definitely something that we could already do. It's a little bit manual today, but if a user of ours were to reach out to our member support team and ask for sort of a statement of earnings, we can sort of provide you with a statement that sort of summarizes your earnings across the apps you've connected. I mean, the other thing that we're going to get into probably next year is support along the path towards filing and preparing and filing your taxes. Just because there's so many like moving pieces in terms of like, one, the multiple sources of income that you have, but 2, like identifying deductions and places that you can optimize your taxes, and then ultimately like actually helping remit. So I do expect that we're going to be going down that path with the products. If you're an account holder and you've got your 4 gig apps connected, we should be able to really quickly tell you what your tax filings look like and help you file them, and then et cetera, and maybe even help you put money aside, estimate how much money should I be putting aside so that I know I've got enough money when tax time comes, right? So, and all of this will lead to just like better, cleaner, prettier documentation that you could provide to a lender. I mean, I think a big part of this over the long term is that we need to like normalize gig work as a career that is not looked at as like inferior to somebody making a similar amount of money in a W-2 job, right? So if you can consistently show that you make a certain amount of money, it should be viewed as a credible way to earn a living, right? I think there's still a little bit of a disconnect there because more traditional financial institutions just haven't really wrapped their head around what gig work means and how they should be evaluating clients that make a living this way. So we're hoping to play a role there.
And I think that just before we move on, I think part of it too is his follow up. I mean, this is I think what is the example of what they don't like.
Yeah.
I mean, and they just don't, I think, like you said, they don't know how to really read the gig worker.
Yeah.
I mean, like, is that, and I don't want to make this sound bad to any of the gig workers listening. Clearly, they all know me to be a advocate for gig work, but they almost view it. I feel like they almost view it as not a job, or they don't know how to view it. They're like, I don't understand this. It sounds like you are taking on a job. What happens when that job's over?
Yeah, no, I think the way I would think about it is that regardless of how much money you're making in this field, how do we get you to a place where you're being viewed equivalently to somebody making a similar amount of money in a W-2 job, right? So
exactly,
no better, no worse, just like equivalent, So if a bank is willing to lend to somebody who's making $47,000 a year, then they should be willing to lend to a gig worker who's making $47,000 a year. We need to provide that bank with enough information for them to really know how to like evaluate you. And I think I think where we can play a role is really give it a sense that there's some like institutional backing to this. It's not just you like snapping screenshots out of 4 different apps and sending them in an email, or it just comes across a little bit unpackaged. And frankly, a lot of the challenge is just convincing them this is like a legitimate way to live and earn a living. And once you've solved that problem, then all of a sudden your standard financial products become a little bit more accessible. So
Sure.
Yeah,
absolutely. I think that I almost view it like here, like when you said that, cash advances up to $1,000, you're looking for a little history before you're going to just kick down $1,000, but you're learning about a gig worker to go, okay, we can afford to give him that $1,000 advance. Seems like there should be something somewhat the same for people who want to buy a house and have proven year after year that they're making money in this industry. If they are and they've stuck with it, it's got to be something that's going to happen.
Yeah, and if a user gives us permission, we can also go back and we can pull historic earning data from even before you were a user of ours, right? So, ultimately, you're familiar with the guys at Argyle, and so Argyle would allow us if a user sort of says, "Hey, I want to connect my Uber profile, my DoorDash profile, and my Curry profile," we can go back and see all the historic earnings in that profile, so that we can give you sort of a summary of, hey, here's what you've earned, and here's the time period you earned it in. Here's how it broke down across all these different apps that you used. But it gives you a little bit of a cleaner picture. And frankly, like I think one of the simplest problems to solve is we've talked to a lot of gig workers that if you ask them how much money have you made this year so far, they don't have a simple way to answer that question, because it's like there's nobody just like doing the math for them effectively, right? Like they could go and they could pull up the numbers in their various apps and sort of manually do the math themselves. But they don't have like a good, when you have a job and a paycheck and a W-2, what your weekly pay is, what your take home is, how much money you made last month, because it's consistent and it's sort of like rinse and repeat. In this context, it changes. And so you have a little bit of confidence, but not perfect confidence. So yeah, I think there's just an information gap that we can help fill there.
Yeah. I agree. So the spending account, 15 plus ways to work, one convenient account. So when we're talking about the 15 plus, are we talking about the platforms?
Yeah, I think we're actually at 20 or 21 now, but yeah.
Okay, because let me for the 7 people in here and for those of you in the chat and whatnot, and I'm sure the people that will watch this later, because I know just 12 hours ago we were doing a live stream, and there were a lot of people, so maybe they're not even up or they're working the day. I don't know, but let me just list off what I know you have on the platform. You have Uber, Uber Eats, Lyft, Wag, Shipt, Instacart, Grubhub, DoorDash, Amazon Flex, Dolly, GoPuff, and Rodeo.
We just launched Winolo, Point Pickup. I'm forgetting one or two. There's a few others. I think I can get back to you with the sort of full list. But every time we identify,
but that's a much bigger list than you had last time.
Oh yeah, no, I mean it's every 2-3 months. There's probably another 3-4 names getting added.
And these aren't little tiny startup companies. These are the big boys. So
one of the options when you get to that part of the sort of onboarding experience with the app, we ask you, which apps do you work for, and do you want to connect your profiles? And if the app's not listed, then there's a field to say, I work for an app that you don't have listed. Here's what it is. And then that's sort of like if we just follow that field. And then we say, 30 people have said the name of the same app. Let's go look at it. Let's go dig into it. And then it'll get prioritized and we'll add it to the sort of the backlog. And then we work with our partners at Argyle. We say, hey, what's it going to take to add support for this company? And then we work through it. And generally a month or two later, it's added. So, I mean, from our perspective, we'd like to get to a place where like every single app out there that is for gig workers is on our, like, is supported. It's just a matter of there's some time and energy required for every single one of them. So.
Sure. And, I gotta give a shout out. I did this the last time we talked to you. I got to give a shout out to the guys at Argyle, because I know Matt works with them heavily, but I work with him heavily too. He's not just asking me if I'm familiar. He knows that I am through Para, but those guys are amazing. Yeah. I mean, they charge for the service for sure. there's a good price point on there, but their
Yep.
service is impeccable.
Yeah.
I see that, like a comment like this one too. I track everything. It's my business. I know everybody does, but there's things missed.
Yeah.
Even no matter how good you're tracking it, you can do better, even if you think you're doing amazing. At least in my
lots of great
opinion.
tools out there. I mean, I don't think Moves is out there to replace existing tools that people are already using. I do think that there's some value in just having, especially when you're spending and when you're earning, having like a unified way to see the totality of your earnings and the totality of your spending, especially when we're trying to look for spending that might be eligible for rewards or spending that might be eligible for deductions of your taxes. If you're spending across 3-4 different accounts, it's easy to lose stuff, and you miss a deduction that you might have been eligible for, or
Sure.
whatever. So,
yeah. Gig economy for the modern day worker, and let's see. How does Moves create solutions for self-employed gig workers? Can we expand on that a little, or?
Yeah, I mean, I think a lot of our solutions are really narrowed down to helping you manage your financial life, and then the
getting
longer
it
term,
into one place too.
the longer term aspiration is I mean, I sort of equate our long term vision as how do we become, without using the word union, the union of gig workers, right? So
You just used the word union.
yeah, I know. I don't have a better word. I mean, we call this part of our business the Moves Collective. So maybe the word collective is maybe
yes.
better.
Yeah.
We're a big part of what I think is missing in this space is some sort of recognition that this workforce is massive and has important and unique challenges, and not enough people are listening to those challenges and trying to think about solutions for them, including Uber, Lyft, DoorDash, you name it, right? So I think there's a big gap in just representation and voice where we can understand what problems people are facing and then raise those problems and either solve them ourselves with products or address them by getting to the table and having direct conversations with these companies. And that's why we've been rolling out this Moves Collective sort of stock feature, just because we think that stock is a really interesting way to actually do that, to actually give ownership to gig workers and then use that stock to turn around and propose issues and vote on issues. And, the moment you're a shareholder in a company, you have rights associated with that. So anyway, that's sort of the long-term thinking, is that we're going to be in a position to actually advocate for the changes that gig workers are hoping will happen in the gig economy.
So when we're going to move into the three parts of the Moves vision here.
Sure.
Should we talk about the share earnings first, or is that going to come in part 3?
Yeah, we could talk about it when we get there to part 2 and part 3 are probably
okay.
Yeah.
So for the Moves vision, let's just start off. I mean, I'll just give you you already know them back of your hand, but I'll just give you the topic headers and you give us a little rollout of what it is. So a product exclusively for gig workers.
Yeah, I mean, I think this one is it sounds simple, but I think it goes a long way. When the best analogy that we had looking at this when we started is credit unions in sort of the more traditional banking context. Credit unions existed in a time in history where there were very specific problems to be solved by very specific groups of people that banks were not properly solving. So the best example that we always point to is farmers. Farmers had really unique challenges with insuring their crops, with financing their equipment, with whatever, financing their seeds at the beginning of a season, waiting for crops to get paid out at the end of the season, these really long life cycles. And banks often were not willing to work with farmers in the uniqueness of this type of work, right? So farmers' credit unions started popping up around the country. You have credit unions, and they generally are very localized and regional, but they're credit unions, and all they do is build services and financial products for that audience, right? So for us, it was a very similar story, saying gig workers have a unique set of characteristics in the way that they earn a living, the expenses that are important to them, just the challenges that they face on a daily basis. And an average bank is not necessarily going to understand those acute problems. And so they're not going to design product experiences that address those problems. So, our cash advance is probably a good example, a cash advance that's solely determined based on how much you earn as a gig worker in the prior 4 weeks. Nobody else would offer that because they're not serving gig workers exclusively, right? So there's product tailoring that we could do that makes it very specific to the needs of a gig worker. There's also, I think there's going to be more and more opportunities for us to bring more of these product integrations and partnerships into Moves. So the way that you finance your car, the way that you insure your car, the way that you acquire, purchase health insurance, like that is very specific to how gig workers sort of live their lives. And then the other thing is just in our brand. I mean, I don't want to dismiss the fact that like there's a lot of value in building a brand that is, for gig workers exclusively. We are not going out to sell Moves into any other customer segment. So everything that we do, every time that we look at an opportunity to add a new feature or a new product to our business, the question always comes down to like, is this going to help gig workers at the end of the day? So I think just having that sort of dedicated focus is important. And it's going to get us to just go deeper into the life of one customer segment instead of trying to serve everybody and please everybody with a more generic product.
Sure. I gotta ask you this just while we're here, because I remember the question from last time, and I'm not sure even you'll have an answer yet, but okay. I know that it was a question you were intrigued by, which was, like for me, when I work my laser production job, maybe it's already ringing a bell.
Yeah.
Can I attach this in? I mean, even if it's however, if I decide that I'm really loving how all these gig apps are working, I'm using the bank I'm using the Moves platform as all my gig stuff, and then I still have my other bank.
Yeah.
Could I then move that into there too?
Yeah, absolutely. I mean, I think there's still some features that we could do to make that easier, but there's no reason that you couldn't.
I guess the way that I should quick re-say it to the people in the chat or people who are watching this later is the more traditional independent contractors.
Yeah. I mean, I think what you'll notice is that a lot of our features are driven by the specifics of certain apps that people might use. So, the Ubers and the Wags of the world. But that doesn't mean that you couldn't also, if 50% of your income is coming from these types of apps and 50% of your income is coming from some sort of like freelance contract work that you do, in your case, laser light shows and things like that, there's no reason you can streamline all of your spending and earning into this one account. I mean, I think, ultimately I think about myself, and maybe it's just a factor of laziness. I would find it exhausting to constantly have to balance two bank accounts and manage, which one am I supposed to be buying my groceries out of and which one pays my utilities. And so just like the simplicity and the reducing of effort to like manage your money, to put it all in a single account. And then any perks that we roll out, the dollars to access those perks don't have to come from Instacart. They can come from anywhere. So if you want to get access to our 5% cash back on gas, if those dollars,
I was just looking at that.
Yeah, come in from a contract job that you're doing, and you spend those dollars on your Moves card, you're still going to get the 5% cash back on gas. So it doesn't need to come in from earnings of a gig app.
Mm-hmm. So moving on to part 2, a collective voice for millions.
Yeah, I mean, I think this is what I was sort of alluding to with this union narrative. I mean, what I find really unfortunate about this industry, and probably the reason that we saw an opportunity, is that I would venture to guess that it's the largest labor force in the US, if you define it as a single labor force, that does not have any human resource department or labor union looking out for its interests, right? So in some contexts, you work in a company, they've got an HR department, they care about their employees, they think about what employees are going to need to actually be able to live manage their lives and their finances, et cetera. In other contexts, unions play that role. In the gig economy, you have neither. You're sort of on your own. I mean, fair enough, you're an independent contractor, but there's certain amounts of requirements and dependencies that you have on these apps that you turn to make a living. And nobody at these apps is exclusively thinking about you. And no one of these companies is well positioned to, because the average Uber driver is also driving for another app or delivering or whatever. And so Uber doesn't see you holistically. They only see you through the lens of the time you spend on Uber, right? So we're trying to broaden that a little bit and say, hey, there are problems that affect gig workers at a really, really broad level that no one of these companies is going to solve unilaterally. And so we want to be a voice to sort of advocate for some of those changes. And it could be things like, in Massachusetts right now, as an example, There's legislation being debated.
H1234.
Yeah, exactly.
We talk about it all the time.
I'm sure everybody listening is familiar because of the space that you're all in.
Mhm.
But there's rules being contemplated in that legislation around how do you become eligible for a health stipend? At what level of hours work does Uber have a responsibility to pay you this additional stipends that you can use for health insurance? Those rules are being defined with Uber lobbying for what they see best for their business, right? So Uber says, well, I don't want to give you a health stipend unless you're working more than 15 hours a week on Uber. But what if you're working for 5 different apps, 10 hours a week on each app? You're now a 50-hour-a-week worker getting no stipends from anybody. Like nobody is looking at the problem from your perspective. They're looking at it from their company's perspective. And I think that's where there's a missing voice in this whole equation. And there is no labor union in this space. I mean, there's some unions getting active.
That's already a problem. Like, so in California with Prop 22, they're already starting to put the pressure on them that they need to have a system, because you can work 3 apps and be getting your minimum wage on all 3 apps during the same active time.
Yeah.
And so they're already data sharing. I mean, I've already talked to people that, some of the people I talk about AB5, all the big players. Yeah. And it's coming down the path. I mean, it's coming down quicker than I thought too. The unions have a ton of money, which they haven't out there in a while. And they're already looking at, hey, you can't be doing this. And in a way, it's odd because Uber's finally, they're not siding with the unions, but they're saying, yeah, there's some reality in this. We need to know who's on what platform and not triple pay them and what's going on. And I think there's some real crash landing coming for that one.
Yeah. And frankly, I think the way that this is probably going to play out is we are going to see some role for unions in this industry, and it'll probably be state by state. It'll be different. Some states it'll be, there will be no unions. In some states there will be unions, and a lot of it will depend on how these legislative discussions happen across the country. Yeah. And my suspicion is over the next 2-3 years, every state will have a version of this conversation. And they'll,
hopefully not the PRO Act, because that also removes right to work states.
Yeah.
And then you get the federal government telling states how to run their states, and that becomes a huge problem.
Yeah. Yeah. No, I think what I've always sort of been critical of with the unions in this space, and they're getting better because they're getting pushed back, I think appropriately, is that you can't look at this from the perspective of demonizing Uber and Lyft. Uber and Lyft at the end of the day need to be able to build out a sustainable business model. If not, everybody loses, right? So you got to find this balance between like, what is the sustainable business model that still can attract customers that need rides and deliveries, but also can attract workers that need to make a living, right? And so if you go too far one end of the spectrum, because unions are demanding unreasonable things for workers, all of a sudden these businesses become unviable, and then nobody wins because they're just sort of pushed out of business effectively. Yeah. I think what we've been aiming for, and we'll probably get in this in point 3 of our vision, is how do you find a way to make it feel like it's not us versus them, but it's like us all working on the same team. And unions, I find the tactics are very regular, like very generally us versus them. It's either we win and they lose, or they win and we lose. And there's very rarely sort of a win-win where we can all sort of move forward together. So that's what we're hoping to get out of this Moves Collective concept that we've been building. But
yeah. So let's move into point 3 then. A gig economy owned by its workers. I think this is my favorite part. I always love this.
Yeah, I mean, this is, and I'll caveat that with saying companies require money, they require investment, they require time to get to market, they take risks, right? So, as much as Uber is a flawed business, somebody had to take risks along the way to build it, and to put money into building this product and to building that organization, and not only in the US but globally. So, fair enough, there's value in taking that risk for investors. But I think what's missing in the equation is that that pie is not shared with workers that are attributing an enormous amount of value. At the end of the day, Uber is a double, if not triple-sided market, right? Double-sided in the sense that, if you're a passenger, you need a driver. If you're a driver, you need a passenger. Triple-sided, maybe if you pull in sort of like restaurants on the delivery side, but so the delivery guy, the customer, and the restaurant. But if you built that business without remembering that your driver, your supply, is critical to the healthy balance of your ecosystem, then eventually you're going to drive workers away. The business will have to spend enormous amounts of money to replace those workers, which they currently do. I mean, this week is probably very topical because there's been a ton of noise about Uber and Lyft's stock price, the amount of money they've had to spend on driver acquisition and driver incentive programs, because they do a really bad job at holding on to people for the long term. And I think a lot of it is just they haven't signaled to gig workers that they prioritize them, that they care about them. And so for us, one of the paths to solving that is, any company out there, whether you fault them for it or not, will always think about their shareholders first. And so
wait for it, people.
So our sort of our aspiration here is, well, why aren't gig workers shareholders? And how could we make every gig worker in America a shareholder? And what would be required to do that? And how does that change the conversation? And it doesn't mean that 100% of Uber should be owned by its drivers, but it does mean that in the equation of who owns Uber, drivers should represent a meaningful percentage. And now it's just a matter of figuring out how to make that happen. So that's where we're doing the early versions of that already today in the app. So
I was going to say but that's already happening, isn't it?
Yeah.
You're already doing and again, guys, don't think you're like getting hundreds of shares of Uber per hour or whatever, but you're doing things where is it per time basis?
It's a bunch of stuff. I mean, we're going to roll out more of these, but we sort of structure this. We call them tasks. If you complete a task, you earn a dollar value of stock with that task. So today, if you were an account holder, you could get. There's a feature in the app called the Moves Collective. The Moves Collective is sort of like, there's a task, and then if you complete the task, it's like, well, if you complete this task, you get $5 of Uber stock or $10 of Lyft stock or whatever. And those tasks tend to be tied to the amount of money you're earning. So, hey, earn $400 this week on Uber, earn $5 of Uber stock, for example. Or the other one that we're rolling out is refer a friend, earn stock. So if you refer a friend to the app, you'll earn stock. That friend will ultimately earn stock when they come into the app. The other program that we're going to roll out later this year is something we're calling Claim Your Share. And the way we're sort of positioning that is to say every gig worker should own shares given the time they've spent in the gig economy. So the gig worker who's worked 7 years in the gig economy full time should be entitled to more shares than the gig worker who's worked 2 weeks in the gig economy part-time, right? So
absolutely,
you come into the app, you connect your profiles, we'll determine how long you've been a gig worker, how much work you've done, and we will just give you shares, a higher or lower amount depending on how long you've been doing gig work. And to your point, you're not going to get rich off of this stuff. We're probably talking tens to hundreds of dollars of shares to get started. And then, as you use the product, as you help refer friends, I mean, we do see a path towards getting gig workers in a given year to earn hundreds of dollars of shares in a given year. And so if you do this for years, then you could, at the end of the day, it's still coming out of revenue that we're earning in the product. So, but then the other sort of side to that is that if you have 1 million gig workers earning $100 of shares, that's $100 million of share value. That starts to be a meaningful dent to start getting the attention of these companies. Corporate governance in these companies is interesting. A lot of people will think of shares and they'll say, well, earning 50% to sway a vote of shareholders. You don't need to own 50% of a company to sway a vote. There's a really popular company or a popular example from a couple of years ago, Exxonmobil.
Right, it really comes down to the articles of incorporation or whatever you've used and how those terms are set, right? I mean, it doesn't.
Well, and a lot of it is also like how well told your story is. I think there's a lot of empathy in the public around sort of the plight of gig workers. And so, with a small amount of ownership, I think you can have a really disproportionate influence on how these companies prioritize you, because they don't want the bad press. They don't want to be seen as not, prioritizing issues that are being raised at the table. In January of this year, we went through the process of submitting a shareholder proposal to Uber. We're a shareholder of Uber's. We're a shareholder of Lyft's as a business. We're a shareholder of DoorDash, Grubhub, Target, and Amazon as well. So 6 of these companies that we own shares in, so that we can use this mechanism. And this mechanism effectively means that we can write down a proposal, we can submit it to them as a shareholder, and they are required to consider it by law. The SEC provides rules for how this is done. And the proposal is required to show up on the agenda of the annual general meeting of shareholders, unless they can negotiate with you and convince you to withdraw the proposal. And in that negotiation, they're generally compromising on stuff. They're generally agreeing to do something that they wouldn't have otherwise done. And so we ended up withdrawing a proposal last month from Uber because we submitted a proposal asking Uber to change the criteria for their board of directors so that one member of their board would be required to have previously driven for Uber. And we were trying to make the point that nobody on your board understands what it is to be a gig worker, right? So ultimately we withdrew the proposal, but we got them to agree to adding an agenda item to their board meeting that they otherwise would not have been talking about. We got them to agree to publishing something in their annual report about this issue. And then we'll do this again next year, and we'll do it again the year after. And we're just going to keep bringing issues to them using this mechanism. And that's the type of thing you can do if you own shares. That starts to give you a voice that they're required by law to listen to. So that's where we hope to get to with this. And the more gig workers that we can aggregate into this model, the more powerful that voice becomes.
Yeah, and when you were mentioning the shares, I got to say this to the people listening that it might not appear to be that much, like you were just saying, but we've been actually recently been talking about residual income. And people are having a hard time grasping that. I know it seems like it'd be an easy grasp, but it really isn't when you get into some of the dynamics with some people. But that's how I kind of view this. You can just kind of not really think about it, but it's going to be something. And just knowing that you have that too makes you feel a little bit better about the platform, I think, from my opinion.
No, I think that's right. I mean, two ways to think about it. One, free money. It's never dollars coming out of your pay going to buy shares. It's always dollars we're giving you in shares, right? So that's one. The second way to think about it is I think there is I don't want to discount the fact that owning a share in a company changes your perspective on that company. It gives you you see them in a different light. I think you start to solve a lot of the problems of this hostility and tension that exists between workers and these apps. I think in a good way, because I think if there's a way to create sort of a win-win narrative where people feel like, hey, we're all playing for the same team. The companies I care most about are companies that I have in my portfolio, right? So, and even if it's $20 in that company's stock, all of a sudden I have a reason to care about their outcomes and their success. Yeah. And I feel like I'm contributing to that success because I'm actually working in the context of their product, right? So,
sure.
Yeah.
I don't know if the one other thing I want to make sure that we cover, because I know that maybe we crossed over it too quickly, is I hope we didn't throw people at all and not in understanding how the mechanism comes together, like tying your accounts to the bank and your relationship with the bank, because the bank is not you. People need to understand this, that Matt and his company is Moves, and the bank is what now?
The bank is called Blue Ridge Bank. And probably there's simplest way to explain it is we offer a banking product. When you use our banking product, it is in the Moves app. It's branded Moves. Your interaction with us is always our member support team. You get a card in the mail. It's a Moves debit card. But we are not a licensed bank. So what we're doing is under the hood, we partner with a bank. Every one of those accounts has to be FDIC insured, has to be regulated and licensed by the government. So that's where the bank comes in. They're the licensed bank. And then all we're doing is effectively we're bringing that experience to you as a customer segment as gig workers. So, but it's a Visa debit card. It's a full checking account. It's an insured checking account. So your money's always safe.
Now I remembered what the other card was. I called Moves the 30. I called Moves what Chime was 25, 30 years ago.
Yeah. No, Chime is that's a good example. Yeah. And frankly, becoming a bank is complicated, and it could be on our future roadmap to actually become a bank. But right now, we work with a great banking partner. All of our products are effectively products of that bank, but we're bringing them to a customer segment. We're bringing them to market. And so I think the confidence you can have there is that there's a licensed, regulated financial institution under the hood, but we're sort of packaging it for gig workers effectively.
Okay, so for those of you in chat, if you have any questions, put them up at this point, because I have let me see, I have one more I wanted to ask Matt, and I know I got to get him to his next meeting. Matt is a very busy guy, by the way. So I know all CEOs are, but this guy actually works really hard too. So I know a lot of CEOs who, they're busy all the time, but Max seems to be a worker. So
what you can't tell is I'm sitting in front of a green screen on a beach, which is a total joke. But
actually, I know that's not true. Matt's sitting in his house in Toronto right now, in his home office. So, my question was, do the users have? So let's say that. Remember, I think I talked to you about this before too. So let's say that I work 7 platforms that all are on your list of ones you're doing business with. Yeah. Let's say I want to try Moves Out and I'm like, I hate my Lyft account. I'm going to hook on my Lyft first and just see this work a little bit.
Yeah.
After that, do I go in? Can I do this on my own, or is this having to call the bank or you to add more accounts?
Oh no, yeah, it's all pretty automated inside the app. So when you connect your app, your apps, there's sort of 2 stages. There's connecting your app just for us to have visibility in your earnings data. Mm-hmm. At that point, and you could choose, I only want to give them 3 apps. I want to give them all 7 of my apps, whatever. But you would select them on a list. You'd say, hey, these are the apps I use. And then you'd give us permission to sort of connect to your profile. All we're doing at that point is we're just organizing your data for you so you can see all your earnings in one screen. And, and you've seen this feature in other products like Gridwise and others. Yeah. So you have like sort of a dashboard of your earnings, right? From there, if you wanted one of those to get deposited into your Moves account instead of like your Lyft debit card or whatever, then you could click on that one and say, set up my direct deposit.
And I only meant during like a trial period. My point being like, maybe I'd hook up Lyft and maybe that, and I'm going to just say less than 1%, maybe that less than 1% be like, I don't want to do this. And they just kind of bail from the whole project. The other people who are like, wait, this has way more advantages of anything else I'm doing. So now I'm going to hook them all up just so they see the functionality first. So I'm talking like 2 weeks later, you're like, fine, here's the other 6. You
never have to talk to the bank. You never have to talk to us to do this. I mean, what you're effectively doing is when you're switching your direct deposits or your instant payout, let's use instant pay as an example. You're effectively, your Lyft app is where you would designate, hey, to which card do I want my payouts to go? And then what we're doing is we're going and we're adding Moves as a payout destination to your Lyft app. And if you wanted to switch it in your Lyft app, you can just say, no, I want to send it to the other card, and so then it's just as easy as going in your Lyft app to turn it off. Sure. And so there's no phone call. There's no need to talk to a bank. And it's really the direct deposit destination that Lyft is sending your money to, or the Instacart sending your money to. We're telling Instacart, send it to Moves after you ask us to do that. So, and you can do that on one app, or you can do that on all 7 of your apps or whatever. And then there's generally 2 options. There's the option of your weekly payout. So that's like your payroll getting deposited every every Tuesday or Wednesday or whatever the app pays out. And then there's the option of your instant. So if you decide to do your cash outs daily, you could decide, hey, I want to do my weekly payouts, but I don't want to do my cash outs. Or I want to cash out, but like to the extent I'm getting a weekly deposit somewhere else, I'll let that go to my other bank account. So there's lots of optionality in terms of how you set up your account.
Sure. So before we conclude, because I know that the number of people watching is an afternoon watch, so I'm sure I'm going to get here's the thing, I'm going to get a ton of questions after hours tonight of people who watch this. So maybe what I'll do is in a couple of days, I'll send you the link of the YouTube.
Oh yeah, I could probably
I'll let you come back and answer questions because you're probably going to have some interest or whatever.
I'd love to.
But so obviously I will put all of Matt's links in the show notes from his website to any socials that he wants me to list that he thinks are valuable to you guys. I also want to thank those in chat who did show up today. I want to thank Matt for joining us today. It was great catching up and chatting with you. We will be staying in touch. And if you want to find out more on Moves, hit those links, because guys, we did this a while ago, and I think that more people need to be looking into this, because why would you not take, it's the same thing I tell you with Buckle Up, insurance that actually covers you for gig work and at a fair price, at a more than fair price, without having to get the commercial insurance, or Display Ride cameras, a free camera. I'm trying to help you guys with solutions or at least better options that make you feel a little bit better about the gig economy and where your money is and how it's being handled and what's being done with it. I don't know about you guys, but my bank doesn't provide me any of the perks that Matt's talking about here today. And it doesn't even acknowledge the gig economy, my bank. I mean, it does, but not on any kind of financial level where it's helping. So this is something everybody needs to really look into. Hey, make sure to join us for tomorrow night at 9 p.m. Eastern. We do the Rodeo Roundtable, and tomorrow we have Metrobi, which is a last mile startup company, somewhat like Curry and some of the other ones, that pays really well, but they're B2B and B2C. And we have the CEO and founder of their company coming on, so make sure to join us for that one. And Matt, are there any last final words?
No, this is awesome. This is a lot of fun.
Yeah.
And I think the other thing, maybe one final word. I think one of the fun parts about getting involved in a company at this stage is how quickly things change. Like, over 6 months ago, the product was quite a bit less developed than it is today. 6 months from now, it'll be quite a bit more developed than it is today. And so, if there's a feature that you're really interested in, or that you want, or that you say, hey, this is the thing that's really going to change my mind about where I bank, we'd love to hear from you, because those things sort of inform what we build next and where our priority goes. And so we hear from users all the time say, hey, if only you could add this feature. And then all of a sudden that's a priority 2-3 months later, and we build and we release that feature. So a lot of our roadmap is really being informed by people who download our app and let us know what they want. So would love to hear from you.
So is Curry one of the ones you forgot?
Yeah, no, Curry is in the docket to get added as well. So yeah,
okay, so they're more than on your radar, because I know last time I think you even asked what's Curry.
Yeah, no, you're right.
I don't think you knew exactly what they were.
You're a little bit of the prophet, because then all of a sudden in the couple of months after that conversation, we got probably 50 or 60 requests for like, hey, you guys don't support Curry, can I? So anyways, it got added to the top of the list.
Yeah. Well, thank you, Matt. I know you got a full day, so I'm gonna let you go. But yeah, check back and about any questions, and then after the audio podcast, with all those listeners, a lot of times I get the emails, so maybe I'll like kind of summarize a lot of questions from there and send them over to you as well, because I think it's good, even if I can just answer them on the podcast on the next podcast, kind of thing. But
sounds good.
Yeah, thank you for your time. And as always, man, you guys get out there and check this out. Otherwise, you're just sticking with your bank and it's doing nothing for you. If gig work is your primary earning, or even a big portion of it, there's no reason why you shouldn't at least look into this, period. Yeah. So thank you, Matt, and thank you, chat. And have a great day, you guys.